Government as a recession safe haven. Let's have a look. Hello everyone, Florian.Heise here, stein of coffee in hand, and I thought we'd have a look at this interesting article from commercialrealestate.com.au just discussing how government-tenanted buildings appear to be a safe haven, particularly in this recession that, well, we're pretty much in, but hasn't been officially declared. Now, I'm reading in the comments where some people are mentioning, my grandfather or great-grandfather told all his kids to get government work because he lived through the Depression. We're starting to see now that one of the few sections or industries that isn't suffering drastic losses or significant unemployment tends to be the government ones. And they already have pretty good perks. So let's have a look at this, because it seems to be translating over into property. I know of tenants that were, or landlords that were doing anything they could to get governments as tenants, just to secure them in a location, because then people get used to going to that premises for a service, and they're good long-term stable tenants. So let's have a look. In the hunt for secure returns during the pandemic crisis, government-tenanted commercial properties is among the most sought after. So let's jump over, before we go through this article, we'll just jump over here, and this is the Property Council's data room. And here we're looking at commercial office buildings, and you can see the vacancy rates. They had a big spike in the recession Australia had to have, and that lasted for a few years. And this is Australia, so they hit, the average was over, 20%? Right now it's 8%. We'll look at Sydney. Look at that. Look at Sydney vacancy rates, over 20. Look at Melbourne, over 25 in Melbourne for commercial property back then. What are we going to hit now? Because now it's easier for people to work from home too, so you don't need a business to disappear for that floor area to be returned to the market. You just need a business to wise up and think, how can we save costs? Good old Brisbane. Now, we were above 10%. Now it's spiked a bit now. And I'd argue, we'll have to have a look. We'll look at the stock levels. In Brisbane, they don't have it over time, but I'd suggest that it could be because we've got more stock available at the moment. But let's look at good old Canberra. How did it deal with the recession? There was a slight increase, maybe up to 5% vacancy rates, and we'll jump back to Melbourne. Boom! 25. And Sydney, over 20. Let's go back to Canberra. There you go. There you go. And why am I pointing to Canberra for all of our foreign viewers? Because it's our capital city and its business is, government. Pretty much. Pretty much just government. So let's go through this article. The pandemic crisis is unlike anything the commercial real estate sector has experienced before, according to agents. And this applies to the shift in the types of properties that are appealing to investors. In Sydney, certain precincts within the CBD are traditionally thought to hold up better in an economic downturn due to the nature of the industries they employ, according to Mitch Noonan, Director of Capital Markets, NSW at JLL. It will be hard to say particular streets or building types are more resilient than others. However, I would say that different precincts within the city would typically be considered as consisting of core fundamentals and therefore more resilient than others, Mr. Noonan said. The same can apply on an asset-specific basis, whereby assets which accommodate strong credit-rated or defensive tenants would typically hold more resilience. Now, I'm just thinking, how could the average punter take advantage of this? Could you invest in REITs that are specifically targeting government tenants? Perhaps you could. Do they exist? Let us know in the comments, guys. Let us know in the comments, because I'd imagine they'd be much more dispersed than that, because these tenants will be moving around. At least that's what we've experienced as architects. But the nature of the pandemic, wherein huge swathes of the white-collar workforce has been ordered to work from home, and tenants across all asset classes have sought rent relief, has shifted that line of thought. However, this time round, there is a much larger focus on the tenant's ability to continue to operate and pay rent during the crisis, and as such, we are seeing strong demand for assets which have government-secured income as an example, and those investors are agnostic as to location. So, the old saying, location, 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 that's the whole thing about real estate, isn't it? But here now it's who's leasing it out? Who's paying the bills? Because remember, hashtag rent strike, every single business seems to be taking advantage of it, even those that are doing well during this period. And before that, we were talking about the retail apocalypse. It was nearly every second day another business laying off staff before we had these drastic economic impacts and the lockdown. So we can see here, this honestly, it doesn't surprise me at all, because I've been looking at the property council data, and it's obvious that government is secure. I think I shared a tweet a few days ago about the US where no federal jobs had been lost. The reporting of many major tenants with national name recognition requesting rental relief or refusing to pay rent had challenged preconceptions about what secure income entailed. Real estate is largely about cash flow and security of income. Well, isn't all business about cash flow and security of income? But I guess more so in real estate. This downturn has certainly challenged some of the views around contractual income, he said, adding that this would likely have an immediate impact on investors' mindsets. There is a common saying in real estate that cash is king. I've heard it a lot over the past 8 weeks on various conference calls, and I think what it means in this instance is reliability of income will always come out on top. I think we will see a renewed focus on that in the short term over the medium term. I think we will see the return of offshore investors with even greater force, as Australia was already being seen as a beacon of security, and this has been exemplified. As relatively speaking, Australia has managed the crisis very well from a health, government policy and fiscal stimulus perspective. Up to this point, we have to see. But then again, it's a good point. If you compare us to some other nations, the numbers are looking much better. I would argue that perhaps, the economic damage that has been wrought by our interventions into the economy and the sacrifice of liberties that many people were requested to do and forced to do under threat of jail, perhaps was an overreaction, a little bit too authoritarian, but perhaps that's just my individualistic streak and my expectation that people will behave in their own best interests and the best interest for the greater community if those two things align, although some people would argue they wouldn't. We'll have to wait and see. Shift to government-occupied assets in regions too. The gravitation towards government-backed income isn't unique to the city either. Burgess Rawson's Boy Kotler, who has handled a number of recent office sales in regional New South Wales and Victoria, said investors were honing in on assets leased to agencies such as Centrelink, which were as important during the pandemic as ever. Well, there you go. I mean, I've got a map of you can find a map of all of the Centrelink locations. Perhaps there's investment opportunities there. There's going to be increased demand, I'd say, during a recession for these tenants. There's no way they're going to, move. If anything, there may be demand for expanding footprint. I think the most, I don't know, maybe not, depends. What do all the people do in the Centrelink offices? I guess they have to do paperwork, I think the most important point right now is the fact that they are a non-discretionary asset, he said. Put simply, these services are essentially at times like these, making them a somewhat defensive asset class. He's sold 4 Centrelink leased assets already this year. Centrelink office building in Hamilton, in regional Victoria, sold in May for $6.75 million, while another in Kings Meadow in Tasmania traded for $4.5. A property tenanted by Centrelink with the New South Wales government in Bega on the New South Wales south coast achieved a $5 million sale. while the Centrelink in Barnsdale in regional Victoria sold in February for 2.6. He said buyers had been communicating their demand for government-backed assets during the pandemic. Government tenants are arguably more important now than they ever have been, he said. I'm seeing this off the back of the Hamilton Centrelink sale. With the pure number of calls I'm receiving, asking when the next government asset will be coming up. Well, is it a government asset or is it a... Well, as a landlord, people want to lock it in. Now's probably the time for government to sell these assets if they own these buildings. You get a good, probably a premium than you would otherwise. Despite the shift to secure assets, Mr. Noonan said the tightly held nature of the CBD market meant investors in solid economic situations wouldn't be afraid to invest. If an asset is offered to the market, which may not have the appropriate tenant mix today, although it is well positioned to produce reliable income and value growth in the future, we are seeing investors show strong interest in those assets, he said. In addition, the strong fundamentals heading into the pandemic bode well for a strong recovery. We led into this period very well positioned relative to previous cycles. Debt funding costs are at an all-time low, LTVs are much lower than previous cycles, and the risk-free rate, 10-year Australian government bonds, was trading around 70 basis points, providing one of the largest risk premiums on our record, and our vacancy rate in Sydney will be below the long-term average, he said. He recently brought to market 2 adjoining buildings, 114 Castlereagh Street and 139 Elizabeth Street, one of the few properties to hit the market during the pandemic. The property in Castlereagh is a 7-storey retail and office building close to the Sydney Westfield and is leased to the St James Hotel on the lower ground level and the first level. The property on Elizabeth Street is a 4-storey building housing Levendi Jewellers as the major tenant that leases the ground and lower ground levels. The building is directly opposite Hyde Park and St James Station. Both assets offer value-added opportunities, according to Mr. Noonan's colleague, James Arony. This could include repositioning 114 Castlereagh Street to capitalise on the significant precinct enhancements, as well as the potential to redevelop Elizabeth Street into boutique, residential or mixed-use developments. So it's a good time to buy for owner-occupiers. In the owner-occupier strata office market, prospective buyers are facing unprecedented conditions, according to Tim Noonan, director of Noonan Property. No relation to Mitch, okay. The record low interest rates and massive amounts of government stimulus, we were expecting commercial strata office values to increase, he said. It is cheaper to buy rather than lease at the moment, with interest rates at the current levels. Asked to nominate a type of building that will weather the crisis best, he said quality trumpeted everything in the Sydney market. High-quality properties, heritage or otherwise, are typically more popular and easier to sell regardless of market conditions. So there you have it, guys. Property with government tenants, a shelter in this pandemic and potential recession that we're about to enter. What do you all think? I mean, I can't be surprised. This is just an extension of all of the benefits and safety and security that civil servants have. As always, thank you for watching. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join us on YouTube or Patreon. Support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can join us. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Thanks, guys. I'll see you next time.